Feels like you can't go anywhere without hearing about the impact of artificial intelligence. Per a recent study in 2024, 89% of executives consider AI and Gen AI a top priority. Private equity is no exception. And today we're going to cover three key areas where we see the use of AI making a direct impact for private equity firms. One, data synthesis and aggregation. Two, predictive analytics. And three, the impact of human capital and how it affects the way we value the individuals that make up these companies. Data analysis and synthesis is one of the key areas that's an easy application for artificial intelligence. We see this time and time again. When we're in an industry where it's important to get the data from a data room and make those decisions quickly, it's imperative that we use all the tools that we have to aggregate that in a way that's reasonable and fast and automated. Where we see this is in applications like cash flow automation, where we can quickly pull together these reports to predict and forecast exactly what that cash flow is going to be based on automating that information off bank statements. We see it in the democratization of data and the use of tools such as AI and ChatGPT's data analyst, where it allows you to simply update this data information in Excel files and quickly extract the key pieces that are there. What it does is allow us to take that information and work that we're already doing and do it in a completely automated fashion, completely changing the scales of efficiency and what we can do in that area. Beyond that, we get to predictive analytics. If data automation and aggregation was simply replicating the work that we're already doing through the use of these tools, predictive analytics allows us to take it one step further. Where we see this most commonly is for things like customer segmentation and churn, where we're actually able to take information, revenue information, and sales information, and better predict not just future sales, but how strong those customer relationships are and what we likely forecast happening on an individual customer by customer basis. We're actually able to better understand what is the value of this current customer subscription base and how do we forecast that changing. Or in things like forensic accounting, we're able to look at past history, search for anomalies, and better predict things that we don't think are high risk and perhaps require further detection. That ability to do that and take that existing data and run through machine learning allows us to actually expand our capabilities and thus completely change what we're able to do with the information that we have. Perhaps most importantly is the impact that's going to happen on the day-to-day. These huge, bigger AI initiatives are of course incredibly important. But where we're going to start seeing changes immediately are going to be on the day-to-day use cases that everyone can log in and utilize these tools to use, be it helping writing an email or simply coming up with some new ideas. To that end, better understanding the human capital side of any target portfolio company is absolutely critical. The difference maker in how we value a company is going to be our ability to adapt and expand and utilize these AI tools, especially if they haven't been using it before. What's going to be critical and separate the winners from the losers is the capability to see who can quickly utilize these tools, what cultural barriers there might be and how you overcome it, and what education is needed to fill those gaps and ultimately create a new workforce that is capable of utilizing everything that's there. So through the use of synthesizing data, better using that data to predict future outcomes, and creating a workforce that's AI enabled, every single PE firm has an immediate opportunity to completely change the way we work.